Hi guys, you might remember that I made a video at the back end of last week talking about what might happen if we did see a conflict in Iran. Well, that's exactly what has happened, and the lining up in accordance with the Purim festival seems to have pretty much happened. Well, let's look this time around at exactly what's happening in terms of the conflict, how long it could go on for, the potential implications, what we're seeing in terms of oil and gas, but in particular where we could go from here in terms of oil prices and the potential knock-on implications in terms of inflation and monetary policy decisions. So let's look into all of that and more in today's video. So first and foremost, let's just look into exactly how it's shaped out. Now, of course, what we saw was Israel and the US attacking Iran, and Iran didn't necessarily just go after the US and Israel, did they? They went after pretty much everyone that surrounds them, crucially looking towards the military bases in all of these different regions. They would have been taking out radar systems as well, with a view to potentially making it easier for their more expensive missiles to then down the line be launched. So by no means would you say that this is near its completion. It appears to be the case that this initial foray from the Iranians could be setting the stage for more significant retaliation in the days and weeks to come. But crucially, this is also a tactic of trying to draw other nations into this, rather than saying, to what extent will the US and Israel be willing to continue this fight, now pushing it so that other countries potentially put pressure on, particularly the US. And crucially, as we'll get into, really sort of asking questions around the oil and gas sector, if they can raise energy prices and put pressure on global inflation, that could, again, sort of start to push Donald Trump in the direction of wanting to find a solution. So Donald Trump has said this could last something like 4 weeks. It's always been a 4-week process, he says, according to comments given to the Daily Mail. Quite why Donald Trump's talking to the Daily Mail, I don't know. But nonetheless, I mean, ultimately, the fact of the matter is that we're looking at a position where this could last for some time. And of course, the key question, as we've been talking about, is will they shut the Straits of Hormuz? Some people online have been saying that they can't just shut it if they want. Well, they effectively can if they essentially attack ships that are passing through that region. It started off with the Iranians essentially sending out warning messages to ships in the region to tell them not to pass through. And then ultimately we saw a tanker being attacked in the region, and it doesn't take too much of that kind of activity for businesses to essentially tell their ships to stop passing through that passage. You can see here 30% of global seaborne oil trade, 20% of global LNG trade. So oil and gas being impacted heavily in terms of the flow through that region. So the ability to keep that closed for an extended period of time will be key in driving up oil prices. Yes, a day or two's closure will have an impact on oil prices, but if it's still closed in 3-4 weeks' time, you would expect to see oil prices much higher than where they are at the moment. Now, we have seen OPEC step in, and essentially they came out with over 200,000 barrel per day increase for April. It was higher than markets had been anticipating, but crucially, as you can see here, OPEC Plus have pledged to increase production if there's any supply disruption. So keep an eye out for any noise from OPEC. If we do see a massive drop-off in terms of Iranian exports, as you can see here, 1.4 million barrels per day, then you've got the possibility for other countries to possibly make up some of that shortfall. So that can mitigate that part of the equation to an extent, probably not fully. And also bear in mind that previous quotas from OPEC haven't necessarily been matched often. They keep raising production and it hasn't necessarily actually been matched. So notable that whilst they are looking to increase production for April and they've pledged to increase production if there's supply disruption, that might be easier said than done, particularly if you've got countries that can't actually get their product to market because of the closure of the Straits of Hormuz. Now, one key question here is exactly what the end goal is. Of course, we can only look back to Venezuela to see exactly how we come into a potential conflict thinking that the US are going to do right by the local people that are oppressed, and they want a change of leadership into a more democratic system. And ultimately, Donald Trump just comes in, kills the leader, and just appoints someone that's part of the same party, but just willing to take orders by Donald Trump. And so what was interesting here was this headline that I saw, and it came out of ABC, I believe, saying, Donald Trump has told me tonight that the US has identified possible candidates to take over Iran, but they were killed in the initial attack. The attack was so successful, it knocked out almost all of the candidates. It's not going to be anybody that we were thinking of because they're all dead. Second and third place is dead. Now, that, if read exactly how it seems, would point towards the idea that he wanted to appoint someone that's in the room, that's part of the regime. That doesn't point towards regime change in my mind. So I know there's been a lot of talk of your time will come, the people need to come to the streets, take over your country, all that kind of stuff. But this makes it sound like Donald Trump wants to do exactly what he did with Venezuela, which is by and large the easiest solution for him, right? What have we seen in the past when there's been trouble and long drawn out processes in the Middle East, in say Iraq and places like that? Well, it's this idea that they need to start implementing a new political landscape and new elections and the conflict that goes alongside that. If you can just get rid of the leadership, install new leadership, you still see the same oppression in the region, but ultimately the new leadership aren't going to develop nuclear bombs. They will essentially give you a slice of the oil production in the region, that kind of stuff. Then Trump can come back and say, look, I've essentially created a safer world. We've got new income coming from oil. That additional output means that we're going to see lower oil prices, and therefore I've done my job. May not necessarily have done right by the people that he said he's coming in to save, but I don't think he cares, quite frankly. And so what this actually points towards is a potential situation where we see, over the duration of the conflict, ever higher oil and gas prices. But then when we come to the point where suddenly we see a resolution, the resolution could be a lot swifter and easier if it's this kind of resolution. If it keeps the regime in charge and we just see a new head where they're essentially a lot more aligned with Donald Trump and they've made this deal, then suddenly you could see a very swift turnaround, sanctions removed, significantly higher oil prices. And remember, part of this and the idea that this is going to happen is highlighted by the actions of the US and Israel when it comes to targeting oil and gas facilities in Iran. It's not happened yet. And if we see that, that would surprise me. But as long as they don't hit those oil and gas facilities, it signals to me that they ultimately want to see Iran ramping up oil production when all is said and done. Now, we have seen on the flip side some attacks on potentially attacks targeting different facilities elsewhere in the region. So Saudi Arabia has shut down Ras Tanura, the largest oil refinery, following an Iranian drone strike. So we're talking about 550,000 barrels per day. That's massive. And certainly if Iran starts to do the opposite, which is trying to target oil and gas facilities in the region, then that would be acting in the complete opposite direction of Trump. He wants to keep a lid on oil prices, and particularly if we maybe just see a few weeks of high oil prices and then he manages to find a resolution that brings higher output from Iran and everything else is back to normal, then that's probably his best case scenario. If suddenly you see Iran targeting and taking out major oil and gas refineries and facilities, then that is the kind of thing that actually prolongs the length of time that we see disruption and raises prices much more sharply over the near term. And that brings us to this story: Qatar stopping LNG production. If Qatar's shutting down all of its LNG production, that is roughly 20% of the world's output. So this is a huge story, and this is exactly the kind of thing that Iran are happy to see happen, but the US wants to avoid. So again, these kind of stories are going to be absolutely key. It's not just a case of, taking out radars or taking out US bases, things like that. If the Iranians manage to take out major facilities and shut down major facilities alongside closing the Straits of Hormuz, that pushes oil and gas prices ever higher over the near term. And it makes it more difficult to see a swift resolution on the back end of this process, whenever that is. So that's what you've got to keep an eye out on in terms of driving prices higher. The big volatility we've seen has been in natural gas prices in Europe, up 46% on this news. We've not seen that same kind of move in US nat gas prices as things stand, but certainly this is a proxy for potential gains in gas prices around the world. Remember, these gas prices are much more depressed compared to historical levels around the Russia-Ukraine war. When that all kicked off, the prices were much higher than they are now. So that's why you can see these pretty radical percentage moves. 46% move, absolutely massive, but that's only because it's coming from a relatively low base. But certainly there's the prospect of much higher oil and gas prices from here if we do see facilities taken out, shutdowns, and a prolonged conflict in the region. And in terms of the natural gas prices going forward, like I said, you do have the possibility of sharply higher gas prices. Goldman Sachs warning European nat gas prices could jump as much as 130% because of a shutdown in the Straits of Hormuz for a month. Potentially longer disruptions driving prices much higher than that. So that would then hurt, as you can see here, industrial demand destruction. It would hurt the manufacturing sectors. It's hurting the Chinese as well, because much of what passes through the Straits of Hormuz is heading in the direction of China as well. So certainly the longer this goes on for, the longer the shutdown lasts, the bigger the implications in the energy markets. Let's just jump onto some charts and some other things to look at alongside that. So first and foremost, I just wanted to bring up the chart for, let me just bring it up here. Here we go. I wanted to bring up dollar index first and foremost. You can see here we're seeing these sharp gains for the dollar index. And this isn't necessarily just a case of saying, oh, well, it's a risk off move and therefore people are going into haven assets, right? Because it is that to an extent. But it's not just that. The other thing it is, and you can see it here, is a repricing around rate cuts from the Federal Reserve. Of course, we've got the possibility of Kevin Warsh coming into power before too long. And Kevin Warsh historically has always been very cautious when there is a possibility of a major spike in terms of inflation. Now, you could say that the Fed will just look beyond it and say it's a short-term spike, prices will come back down. Maybe it is, maybe it's not. But what we can see here is that there's been a repricing today towards the idea that we don't see a rate cut in June, which would likely be the first meeting after Warsh comes in as the Fed chair, and away from rate cuts in the near future. Let's look into December and see exactly how things are shaping up. Additional pricing for 0 rate cuts this year, 25 basis points worth of cuts and 50 basis points worth of cuts, and pricing away from 75 and 100 basis point cuts. So increasingly pricing in the idea that we see less rate cuts from the Federal Reserve later on this year. And that's a strong reason why we're seeing this strength in terms of the US dollar here. So that's on the FX front. But like I said, really the story we have here is all about oil. And here we go. This is US crude, so WTI. We've seen that sharp rally into this trendline resistance. We can see a very clear downtrend that's been in play. The market thus far over the course of Trump's tenure has been this period here. So by and large, he's managed to keep a lid on oil prices, but we're rising up towards the highest levels since Trump took charge, which is $78. And in particular, if we look over the, say, the monthly time frame, you can see, you know, we do have the possibility that what we're seeing right now is essentially a sort of falling wedge formation. Are we looking to break out from that wedge into a strong move higher? Of course, everyone's talking about $100 a barrel coming into play. Who knows? Who knows? But ultimately, the fact of the matter is that if we do see a continuation of this conflict playing out, if we do see the possibility of a targeting of facilities and closure of facilities, then near-term downside, I think, is likely to soon enough be bought into. Unless Trump feels the pressure of higher oil prices, takes action off the back of that, and ultimately decides to call an end to this, then maybe that's different. But if this lasts a month, if the Straits of Hormuz is closed for a month, if they're targeting oil and gas facilities for a month, that means higher oil prices in my mind. It has to be. And therefore, you're looking towards the potential for a breakup through that resistance at $78. You're looking at the possibility of a repricing in terms of inflation expectations, and you're looking at a repricing in terms of rate cuts from the Federal Reserve. And that, therefore, benefits the likes of the US dollar. It comes to the detriment of the likes of gold, crucially, gold and silver, which has had an interesting time. It's opened higher, it's moved a little bit lower. So, it's been a bit of a up and down move there. But certainly, I would say to the benefit of the US dollar and to the benefit of oil, if this drags on and if they do target facilities associated with oil and gas in the region. So a really interesting one. Is going to be playing out over an extended period of time by the sounds of it. And that sort of length of time, the longer it runs, the more impactful it's going to be. So yes, we've seen a sharp rise in terms of oil prices thus far, granted, but if this rolls on, I would expect to see supply become tighter and tighter, and that lead us into higher prices for oil. The caveat here, of course, is we could see it all come crashing down if we suddenly see a deal struck that also sees the removal of sanctions from Iran and Iranian oil facilities remaining intact, a US-friendly leader coming into play. That's got to be the end game for Trump. So bear in mind, I do expect further upside as long as this plays out. But the eventual agreement, if it plays out how Trump, I believe, wants it to play out, would likely suddenly reverse any of those gains that play out over the coming weeks or however long this lasts. Thanks for watching. I hope you like this. Make sure to like, subscribe, and follow for more. My name's Joshua Mahony, Chief Market Analyst at Scope Markets. Have a great day and good luck trading. Thank you.